This is Jay Norris with Brewer FX here in Chicago. Welcome back to our video trend map. Today is Friday, September 19th. I do just want to point out that Forex trading, or any trading really, is not necessarily suitable for all investors. The charts we're using right now are current snapshots of market conditions, and it may not be an indication of future conditions to come. The first first market we're covering here is the Euro-US dollar. If you can look on the lower right here, we've got our Fibonacci levels in there. You can see the market recovering pretty nicely here up to the 240 minute. We've got a nice pattern of lower highs here. The secondary trend is now higher on the 240 minute chart. We don't really see any divergence yet on the 240, so that tells me that there's probably some more upside for this market. The next market we're covering will be the British pound. Very similar situation to the euro here on the lower right here on the daily chart. We can see we almost got to our upside target here of just below 185. That's going to be a 38% retracement off the bottom there. Looks like you actually have a bad tick here on my 240 minute chart, but you see on the 240 you got the pattern of the higher lows held, and you also have higher highs. That's a pretty good indication that you probably have a little bit more upside here for the pound. I see on the daily chart the short-term trend is definitely higher. Next market, get the Australian dollar. We finally got a bounce out of the Australian dollar. The Aussie was really lagging. Everything looks like you had yesterday it matched the day before's low, and finally we got a nice recovery rally out of that. Good lesson here on the upper right on this 240 minute chart. If you look at your MACD here, look at the divergence that developed. Generally it's going to take that. It's going to take double divergence for a longer term trend before it reverses, and that's exactly what you saw here. So the Australian dollar finally gets a bounce out of there, and it probably has a little more upside to go. The next market we're covering is the dollar yen. The dollar yen, as we saw, it actually had a shift lower for the primary trend at lower right daily, but it couldn't get through the July lows. So that points out the importance of isolated highs and isolated lows. They are the most important points on a chart because it's from those levels we draw trend lines. So the isolated low, the July low held, market couldn't press through it, so you got a pretty good rally here. On the daily, I see the secondary trend is it's debatable. That could, certainly the secondary trend is down. Not quite sure about the primary. Looks like the primary is sideways now. But up here on the 240, you can see the primary trend on the 240 is still down, and we're going to have to see how it does react to that trend line. Next market is the dollar Canadian. The dollar Canadian still fumbling at that 4.5-year bear trend line here on the left, the weekly chart. The lower right here on the daily chart, we can see the short-term trend is now lower. Secondary trend still higher. Primary trend still higher on the daily. Looks like you're going to pull back and possibly test the August lows. In here, let's go up to the 240 minute chart. You're almost there, 104 the Augie lows. You can even pull back to, let's say, 103 and change to test the actual breakout. The dollar Canadian does have a tendency to get in a sideways range and get comfortable there. So that'd be my guess, but I think a test of 103 and a quarter there could be in the cards for dollar. The Swissy, the dollar Swiss. Dollar Swiss, you can see on the weekly it's still struggling with that long-term bear trend line there. Got above it and then couldn't close. Now it got taken down from there. And there's our daily chart lower right. You can see while the short-term trend is down, primary trend, secondary trend still up in the CAD there. I'm sorry, the Swissy, dollar Swiss. Upper right, you got your 240 minute chart. Interesting in that you got both your short-term and your secondary trend down on the 240, which made for some pretty good day trading. Day traders could have taken advantage of the downslide there with the sell signals on the lower time frames. At the long-term trend here, the primary trend, on the Swissy, still up on the 4-hour chart. Next market, Euro Yen. Euro Yen, similar to Aussie, had a nice rally. Came out of the hole here. They took the primary trend. The short-term primary trend was down. They switched it. They were able to reverse the short-term trend here on the daily lower right. It went right to that 382 retracement, or actually that's a 375 retracement. Substituting Gann levels there for the Fibonacci levels. Very similar. Generally only a couple pips apart on a chart. But yeah, you had a nice recovery rally. Good lesson on the Euro Yen. Look at the dojis down here. Look at those two dojis. They showed indecision, and that's all it took to swing things around. You look up at the 240. Again, you had pretty good divergence there. Once, twice, you had double divergence on your 240. You had a triple bottom in there, and once it clawed above that trend line on the 240 at the end of the week here, it was off to the races, as you saw. A pretty powerful rally in Euro Yen to end the week to reverse the short-term trend there. And then there's the pound yen. Pound yen. Look at that. You cleared the old March low here, so it almost looks like you have a big double bottom of sorts there. I like pound yen I like it on the long side now. Because look at this price action. I noticed this last time we were here. That up and down. That up and down is usually indicative of a reversal to come. I call it distribution, and it sure looked like it here. It proved to be distribution when we popped through the trend line here on the daily. Up here upper right, you can see it on the 240 a little bit more clear. Once you cleared this congestion, pow, you got a pretty good rally. So I would suspect you have a little bit more on the upside. You take a quick look over here at the weekly on the left. Probably you should clear out to that, get up to a 25% retracement. Possibly even a 382 or a 375. But as I always point out to you, anytime you have markets that you want me to cover, I'd be happy to do that for you. You may have noticed I went with different charts today. A lot of my clients are saying, well, you use your e-signal charts. We know you pay a penny for those. Why don't you show us charts that we can use for free? So that's exactly what I did today. These charts, they're free. They're with Saxo Bank, one of our partners, and they're neat. I can put Gann levels on there. I can put Fibonacci's. I can go all the way back. I can go with monthly charts, weekly charts. You guys know me. That's important to me. So yeah, let us know. We can have these same charts sent out to you, and that's free. Anytime you want us to cover something for you, let us know. Thanks again. We do this every other day, so just stop by our blog at Brewer FX if you want to check out what we have to do. Thanks a lot, and we'll have a great weekend. See you next time.